Across Africa, borrowing in dollars remains out of reach for many, and when it happens, it often comes at heavy cost. That's why the International Financial Corporation (IFC) is taking a different approach, lending in local currencies. Speaking at the Africa Financial Summit in Casablanca, Morocco last week, IFC Managing Director Maktar Diop said lending in local currencies is now rapidly taking root across the continent.
We are increasingly making loans in local currency. Today, 30% of what the IFC does is in local currency. We will continue to do this.
In September this year, the IFC unveiled a landmark $10 million equivalent local currency loan to Vision Fund, a microfinance institution in Ethiopia, to support small businesses, many of them women-owned and based in rural areas. For countries like Ethiopia, IFC's push for local currency lending couldn't come at a more critical time. Ethiopia is currently in talks with its private bondholders after defaulting on its sovereign debt last year, having already restructured about $8.4 billion under the G20 Common Framework. The local currency lending, as a result, could give the country's private sector a much-needed lifeline. Experts say local currency lending reduces the risk of foreign exchange shortage and could help mobilize long-term savings and investments.
Developing country economies are relatively abundant in labor, but short in capital. So capital is usually a scarce resource. Entities like the IFC that work with the private sector, they could choose to invest or lend using foreign currency, or they could choose to do that in local currency. Borrowing in local currency would remove that risk of generating the liquidity to pay back. So we'll only be concerned about the interest rate in our income in paying back this debt.
For the local currency loan program to be effective, however, Dr. Tedros says African countries must improve the efficiency of their monetary policy.
Prudent management of your monetary policy is essential to ensure that the country as a whole benefits from such programs, to make sure that these funds are utilized in the best way possible. But it is a very welcome, decision, given that a lot of, developing countries, most African countries, have been facing, macroeconomic shocks because of course, initially COVID, and then high inflation, and then different conflicts like the Ukraine-Russia war and others have been straining balance of payments of developing countries. And so foreign exchange comes in short supply. These kinds of schemes allow the financing of domestic firms in these countries while removing the worry of necessarily generating the foreign exchange needed to repay these kinds of loans.
The IFC hopes local currency lending will also allow African banks to access vital dollar resources while strengthening the corporation's equity and investment ties across the continent.
Many commercial banks need dollar resources and have significant local currency deposits. We are in discussions with some banks to grant us access to a local currency line of credit so that we can provide them with dollar resources and use that line of credit to invest in equity in the country.
Local currency lending could usher in a new era for African finance, empowering small businesses, attracting global capital, and helping local economies grow stronger. Beka Toma for CGTN, Addis Ababa.